Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the May 30th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the Insights team. We're back after a 2-week hiatus. Spent 1 week picking up my son from college and the next week celebrating my father's 88th birthday. Happy birthday, Pop. What better way to celebrate all the changes that we've seen in the CME spot market by diving into the latest from the NDPSR report. And let's start with butter. This butter number coming in at 305.15, that represents a +1. So the butter market maintaining close to historical basis, even above the $3 threshold. +1 is a little bit under our expected basis. Manufacturers discounted a little bit, but we're able to move a lot of weight, almost 5.2 million pounds. So significantly higher than our expected 3.5 million. Not a lot of help on the CME. Only 5 loads traded at the CME last week. So all that volume was based on contracts and end users trying to fill spot needs. All in all, I'd have to call it a win for the manufacturer in butter. Up next is our 2 varieties of cheese. We'll start with the blocks, 189.91. As you know, the CME block has been moving rapidly higher. The CME moved 14 cents in the week that we're tracking here to achieve a weekly average of 191.80. So the NDPSR falling short of that lofty level, coming in at a 2-cent discount, negative basis in the blocks. CME up 14, NDPSR only able to muster an 8-cent rally. We traded 37 loads at the CME last week, so a lot of weight changed hands, pretty close to that 189 level. And negative basis is concerning. What's even more concerning is the volume coming in at 10,671,000, well below our expected 12 million pound threshold. And you'll notice that this is the 4th consecutive week where volume on the NDPSR has fallen short. So a lot of enthusiasm at the CME for blocks. That enthusiasm is not mirrored here on the NDPSR. In the barrel, $2.56, so 20056. That is a positive basis to the CME 2-week average of 198.25. However, 2 cents is below our expected 4 to 6 cent positive basis. What's interesting is that at the CME, the 2-week average was up 11 cents. Here, the NDPSR also up 11. So using the 2-week average in the barrel is proving to be a fairly successful barometer in guessing what the NDPSR price is going to be. At this elevated level, traversing north of the $2 level, the manufacturer was able to sell north of 13.3 million pounds. So close to normalized sales in the barrel in a new price neighborhood north of $2. And the barrel volume above that 13 million pound threshold for the first time in 3 weeks, close to what we would expect is normalized volume and basis. The 19 loads traded at the CME may have padded that volume total a bit. All in all, even with that disappointing basis, I would have to call this a win for the manufacturer in the barrel. Up next is whey, 40.83. That represents a +2.5 to the CME 1-week average of 38.35. What's interesting is although the CME has spent a few weeks below that 40 cents threshold, the NDPSR stubbornly sticking above. The low on the NDPSR was last week, that 40.33. This week, 40.83, an uptick. However, if you look at the May 11th NDPSR of 41.56, the manufacturer still had to discount below prior week's NDPSR to move weight, but they were successful in moving weight. Look at this volume, big volume, north of 8.2 million pounds. So the manufacturer had to discount against prior week's NDPSR, but really for whey, that's where the bad news stops, because still hanging on to values north of 40 cents, even though the CME has taken up residence below 40 cents. And at that elevated level, the NDPSR elevated level, still able to move a lot of weight. 8.2 million pounds is nothing to sneeze at. And then lastly, non-fat 114.11. That is a +1 to the CME 1 week average of 113.15. We traded 24 loads at the CME last week. +1 is a little bit below our expected basis, but pretty close to expected 2-cent positive basis. And of course, the volume here just a little bit short of 19 million pounds, kind of coming in as expected. So this is week 4 of the May pricing period. Currently getting a May Class 3 of 1861 with May Class 4 all the way up at 2055. If you carry current CME equivalents out through the 4-week June pricing cycle, currently getting a June Class 3 of 1950 and June Class 4 all the way up at 2017. Thanks for tuning in. On behalf of Paige and the entire Everag Insights team, we'll see you next week. Thanks so much. Bye.